Performance from Oracle, in your mind, does that cement the idea that investors are going to put money in the AI trade? Or do you think today for Oracle and some of these other names, is it more of a one-off and do we go back to the broadening?
I think it's just yet another confirmation that the AI revolution is alive and well. We learned from Nvidia about the growth in their data center business. Now we're hearing from Oracle about the growth of their cloud business. 1,000% revenue growth. That's pretty good, Frank. I think what it tells investors is that the AI road is going to be a long one, and you're going to have to be patient to see returns on investment over time, because all of the action is taking place right now in terms of AI infrastructure development, and companies like Oracle, Nvidia, and data centers are also standing to benefit from that.
I think that leads us to your word of the day.
Yes.
It is construction. And you're talking about construction of data centers and other support for this AI build out, and this could be an AI revolution, I guess.
Yes. So Jensen Huang just recently forecasted that AI infrastructure investment could reach between 3 and 4 trillion with a T by the end of this decade. We also know how important AI investment has become to our economy, as data center investment has matched the contribution of consumer spending to GDP over the first half of this year. Consumer spending used to account for about 70% of our GDP. Now, all of a sudden, AI infrastructure investment is catching up. So that's where you want to look to position your portfolio to take advantage of all of that spending.
And that's what you're
According to KeyBank's Capital Markets, which observes robust demand throughout the semiconductor industry and solid earnings momentum, chip stocks may have additional room to grow in the upcoming year. KeyBank forecasted 30–40% further upside to stocks valuations given historical trough-to-peak analysis, mostly due to additional higher revisions in EPS as the cycle recovers in its most recent quarterly semiconductor cycle research. Although almost half of the usual profits recovery has already occurred, the company pointed out that significant adjustments are still anticipated and that the semiconductor recovery indicates further potential as earnings expansion is still in its early phases. KeyBank boosted its prediction for 2025 ICX memory revenue growth from 5% to 19%, citing improved pricing in light of inflationary pressures and an expanded AI chip mix. In contrast to the 5-year averages of +5%, +6%, and +11%, the analysts now project unit, ASP, and revenue for 2025 IC semiconductor growth X memory to be +4%, +15%, and +19%, respectively. As supply chains adapt, the survey also indicated better inventory circumstances. As suppliers seem to be letting inventory decay at end users rather than pushing surplus product into the channel, aggregate inventories dropped by 2 days to 81, which KeyBank ascribed to more controlled channel conduct. In the second half of 2025, shipments are anticipated to surpass the trend line due to strong demand for AI, a recovery in analog, and a subsequent recovery in auto semiconductors. From a stock standpoint, KeyBank stated that it prefers to place investments in companies that are more along in the destocking process and/or linked to Gen AI. Nvidia, Broadcom, and Analog Devices were named as its top picks. According to HSBC analysts, the Magnificent Seven's total operating cash flow and net cash might reach over $1 trillion by the end of the year. They also have suggestions for how some of the corporations should and could use this money. The $1 trillion estimate is the result of adding HSBC's projections for the remaining companies to the consensus figures for Alphabet, a business that the analysts do not cover. With that calculation, they arrive at operating cash flow of $919 billion, and extra net cash of $209 billion. In a note released on Tuesday, the analyst stated that all except Tesla of the so-called Magnificent Seven firms have positive cash flows and a net cash position, with the exception of Amazon.com. According to the HSBC team, Alphabet and Meta platforms have done both, while Apple and Nvidia have spent on share buybacks, while Amazon, Tesla, and Microsoft have prioritized capital expenditures thus far this year. According to the researchers, the Magnificent Seven have primarily used capital expenditures, CapEx, this year, with an estimated $414 billion for 2025. They noted that since 2024, capital expenditures have surpassed share buybacks due to the rise in investments in artificial intelligence. Some of the businesses may want to reevaluate their spending, according to the analysts, as the entire addressable market for artificial intelligence, cloud computing, electric cars, and other Magnificent Seven areas, is anticipated to expand and support strong cash generation in the future. For example, with a $110 billion plan announced in May of last year, Apple has spent the most on share buybacks among its peers. However, the analysts noted that Apple's pre-buyback revenue and profits per share, EPS growth, are among the lowest. As a result, according to HSBC, Apple may concentrate its funds on mergers and other investment possibilities to boost growth. The analyst pointed out that acquisitions might emerge as a more important choice for capital allocation if buybacks aren't increasing earnings per share and capital expenditures are constrained. During the company's July earnings call, CEO Tim Cook stated that Apple had purchased 7 smaller businesses by the end of the year and alluded to the possibility of a future, larger acquisition involving artificial intelligence. Apple's concentration on buybacks was questioned by HSBC analysts who described the company as late in this area and suggested that the funds would have been better used for AI initiatives. According to the experts, Apple might have exceeded Meta's AI budget if the same sum had been set aside for AI in 2022 to 2025. According to the analysts, Nvidia could increase its cash pile to $500 billion by 2028 and initiate new repurchase programs of $20 billion to $65 billion annually if it were to follow the lead set by Apple, Alphabet, and Meta, the biggest buyback players in Mag 7. In August, Nvidia declared it was increasing its buyback program by a record $60 billion. To support its AI initiatives and other business activities, Meta increased its capital expenditure guidance range in July to $66 billion to $72 billion. Over the next 3 years, the HSBC team anticipates that the corporation will continue to give the expansion of its AI infrastructure top priority. Analysts estimate that Meta will continue to spend between $85 billion and $90 billion on capital expenditures after that. According to analysts, the IT behemoth may also keep repurchasing shares to make up for stock compensation dilution. Additionally, experts predict that Microsoft will continue to return the majority of its free cash flow through buybacks and dividends, more than doubling its operational cash flow to $359 billion by fiscal year 2029. Citing potential antitrust concerns, HSBC stated that it is also not anticipated that the tech behemoth will undertake acquisitions that would change the game. Million-token coding and generative video applications are specifically designed for the Nvidia Rubin CPX GPU. In a single rack, the Nvidia Vera Rubin NVL144 CPX platform offers 100 TB of rapid memory and 8 exaflops of AI performance. With $5 billion in token revenue for every $100 million invested, businesses may monetize on a never-before-seen scale. Cursor, Runway, and Magic are among the AI pioneers investigating how Rubin CPX may speed up their apps. Today, Nvidia unveiled the Nvidia Rubin CPX, a brand new GPU class designed specifically for massive context computing. As a result, AI systems can now process generative video and million-token software code with unprecedented speed and efficiency. The new Nvidia Vera Rubin NVL144 CPX platform integrates Rubin CPX with Nvidia Vera CPUs and Rubin GPUs. Compared to Nvidia GB300 NVL72 systems, this integrated Nvidia MGX system offers 7.5 times greater AI performance with 8 exaflops of AI computation, 100 TB of fast memory, and 1.7 petabytes of memory bandwidth per second in a single rack. Customers who wish to reuse their current Vera Rubin 144 systems will additionally have access to a specialized Rubin CPX compute tray. According to Nvidia founder and CEO Jensen Huang, the Vera Rubin platform will represent yet another advancement in the field of AI computing by launching a new class of processors known as CPX in addition to the next-generation Rubin GPU. Rubin CPX is the first CUDA GPU designed specifically for massive context AI, where models reason over millions of tokens of knowledge simultaneously, much like RTX transformed graphics and physical AI. The maximum speed and token revenue for long context processing are made possible by Nvidia Rubin CPX, which goes well beyond what modern systems were built to manage. As a result, AI coding assistants evolve from basic tools for generating code to complex systems capable of understanding and optimizing complex software projects. An hour of video can require up to 1 million tokens for AI models to process, beyond the computational capacity of conventional GPUs. The Rubin CPX offers previously unheard-of capabilities in long-format applications like video search and high-quality generative video by combining video encoders and decoders with long-context inference processing on a single chip. The Rubin CPX GPU, which is based on the Nvidia Rubin architecture, is tailored to provide incredibly high performance and energy efficiency for AI inference workloads. It features a cost-effective monolithic chip design that is packed with potent NVFP4 processing resources. With NVFP4 precision, Rubin CPX provides up to 30 petaflops of computation for optimal accuracy and performance. It has 128 GB of economical GDDR7 RAM to speed up even the most taxing context-based tasks. Furthermore, when compared to NVIDIA GB300 NVL72 systems, it offers 3 times faster attention capabilities, increasing an AI model's capacity to handle lengthier context sequences without experiencing a lag. Numerous configurations of Rubin CPX are available, such as the Nvidia Rubin NVL144 CPX, which can be paired with the NVIDIA Spectrum XTM Ethernet networking platform with NVIDIA Spectrum XGS Ethernet technology and NVIDIA Connect X9 Super NIC STM, or the NVIDIA Quantum X800 InfiniBand scale-out compute fabric. Businesses may profit on a never-before-seen scale with Nvidia Rubin NVL144 CPX, which generates $5 billion in token revenue for every $100 million invested. From large-scale software development to the study of dynamic visual imagery to better interpret moving images, artificial intelligence developers are investigating how Rubin CPX may speed up their applications. With intelligent code generation and collaboration tools right in the coding environment, Rubin CPX can increase developer productivity, according to Cursor, an AI-powered software business that provides a sophisticated code editor. According to Michael Truell, CEO of Cursor, the company will revolutionize software development by delivering blazing fast code generation and developer insights with NVIDIA Rubin CPX. This will enable users to ship ideas that were previously unattainable and unlock new levels of productivity. With the use of NVIDIA technology, Runway, an American generative AI firm, will allow creators to create complex visual effects and cinematic content at a scale and efficiency never before possible. According to Runway CEO Cristobal Valenzuela, video generation is quickly moving toward longer context and more adaptable, agent-driven creative workflows. In order to accommodate these demanding workloads and create more versatile, intelligent creative tools, we view Rubin CPX as a significant performance improvement. This implies that producers, whether they are big studios or small artists, can produce their work with previously unheard of speed, realism, and control. The fundamental models that underpin AI agents that can automate software engineering are being developed by Magic, an AI research and product business. According to Magic CEO Eric Steinberger, our models can see a code base, years of interaction history, documentation, and libraries in context with a 100 million token context window without fine-tuning. This advances our understanding of autonomous agentic experiences by allowing users to coach the agent during testing through dialogue and access to their settings. Our computation tasks are significantly accelerated when we use a GPU like the NVIDIA Rubin CPX. The whole NVIDIA AI stack, from enterprise-ready software to accelerated infrastructure, will support NVIDIA Rubin CPX. By effectively scaling AI inference, the NVIDIA Dynamo platform significantly increases throughput while reducing reaction times and model-serving expenses. The newest multimodal models from the NVIDIA Nemotron family, which offer cutting-edge reasoning for AI agents prepared for the enterprise, will be able to run on the CPUs. NVIDIA AI Enterprise, a software platform that consists of NVIDIA NIM microservices, AI frameworks, libraries, and tools that businesses can install on NVIDIA-accelerated clouds, data centers, and workstations, may provide Nemotron models for production-grade AI. With NVIDIA CUDA-X libraries, a developer community of over 6 million, and almost 6,000 CUDA applications, the Rubin platform expands NVIDIA's developer ecosystem, which has been built on decades of innovation. It is anticipated that NVIDIA Rubin CPX will be accessible by the end of 2026. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
How are things looking on your end today, Kevin?
Looking pretty good, Marley. Obviously, we've had a decent day trading around that 6,500 level. We have now broken through here, and now we're trying to hit a little bit of an area of resistance. Let's see if we actually still have some momentum to still have some gains or still make up some gains for the remainder of today's session. Earlier this morning, we kind of talked about the 6,500 level as a key area of resistance. That's kind of the first area of resistance, and that's exactly what it did. Over the last, let's say, hour and a half or so, we've been trying to break through and have some follow through here. Now, the next area that we were looking at this morning is 65.30, and that's going to be key for us going into the close. If I'm kind of looking at the levels right now, not looking at 65.30 as so much as of right now, but anything can really change. Looking at 65.20 though as your potential area of next resistance and potentially a pin risk area going into the close. And if not, if you have any type of failure, looking at 64.90 as your first area of major support. But we started off the day a little bit strong, had some weakness, saw a little bit of a consolidation. You could say maybe even a double bottom pattern happening with two hammer candles taking place back to back. And we've been in an uptrend, a little bit of a bull flag taking place or a consolidation, breaking out of that bull flag. What you'd like to see going into the close is obviously us moving higher. 65.20 would be a key area for me, kind of going into the close. And that's really kind of the makeup right now when you're looking at the options flow just in general. On the SPX, we had some bearish flows early on, but it has been bullish as we've seen the day go by. And so that bullish flow, if it continues into the close, could set us up for a decent little, 10, 15 point move from these current levels.
All right, and as far as volatility today, has it been about normal or higher than usual?
No, I mean, volatility, I still think it's cheap, given the fact that we have some inflation risk over the next couple of days. PPI tomorrow, which is a little bit more volatile when trying to estimate what the number is going to be. And then you have CPI coming out on Thursday. But the VIX right now is sitting at around 15, which is implying less than a 1% move in the S&P 500 to the upside or downside. This chart here is just kind of comparing what we saw last year compared to what we are seeing this year. This year is in blue, last year is in red. We did see the spike to the upside in volatility last year around this time, Marley, and that's really when we actually had the kind of the revisions for the BLS data and when we started seeing a little bit of concerns around inflation as well as the labor market. This time around, let's just say that the market was bracing for a very impactful reduction when it came to the amount of jobs being added over the last 12 months, at least going up till March here, and we were already ready for that, and that's why we have not seen any type of spike in volatility. But once again, over the next 24, 48 hours, there's still an opportunity for re-rating higher for volatility, but the VIX is definitely diverging from what we've seen in the past, not only what we saw from this time last year, but even the 10-year and 15-year seasonal trends. This is actually a relatively cheap market right now.